So let's have a go at this third one on this chart here. Cable, 1 day, 3 potential opportunities. This would have been before I would have got up though. Excuse me. So, well, don't need to clear the chart down because I might do another video on this one. I'll explain in the video if I do it. So high, low, lower, high, lower, low. Notice again in that whole downswing here there were no reversals. There was one up here by the looks of it, but it looks like the pullback just went to oblivion. And there was another one up here that did work, but notice that's why we wait for the pullbacks. This will have reversed on itself almost straight away, and you could not have got the 3 candle reversal or swing trend back in the right direction. Hopefully that is clear to you. And then when it pulled back down against this reversal here, lo and behold, we got another entry into the short side. Pull back the green candle after the close below the low there, or you could have waited for, should have waited really, for the break below here, with a close possibly here, and even then a pullback continuation. And this would have been part of the massive swing and probably a daily or weekly reversal to the downside. So back to this one. Our reversal penultimate candle is here. This is the break and close by the look of it. High, low, lower, high, lower, low. All of this is just noise until it breaks and closes above the yellow line. Let's have a look at the high and close of that one. Close 25689 and the level is 2569. So we didn't close. Now we need to check the open of that. Open was 25688, and as I said before, that's 9. So this wasn't the reversal. This candle's high was. Now we need to double check the H1, because we do not want to be trading into an H1 resistance level when with a M30 reversal. That's always important too, guys. So the H1 is that level there. That's why it's always important to draw the lines before you consider entering your trade. I realise I didn't do it on that one, but I was just doing this one for a different reason, just showing the internal trends. You can do that one yourselves for practice, homework. So now we've got the reversal here, slap bang into that H1 high, so we wouldn't want to be trading that because we can't. It's already tested the resistance and the resistance has held, it hasn't closed through it. So that means then we have to go up to this one. But for argument's sake, if that resistance hadn't been there, the H1, then we would have had a potential pullback and entry. And as you can see, we got the bust and break. But we would have had a bust. We would have entered using the lower time frame bust and break, and got our move, captured that move there. But to be safe, you have to make sure you're not trading into a higher time frame level. So that then means we have to check the H4, and that's why we would have done, before I'd done all of this, change the settings on that, I would have done all the prior levels anyway, which is what I always do. That's best practice. Get back to where we were, H4. So H4 now, the level is here. Oh, we've changed charts. I do apologise, I thought that looked a bit odd. Sometimes that happens because your mouse is on top of this or whatever. So H4 above us is here. Sorry about that. So then we go back to H1. And once again, the H1 is confirmed straight into the H4 level. There is no surprises about that, because, you know, if we break an H1 level, where's the price going to go next? To try and break the neck frame up. So this could have been traded, but you would have had to rely more on your RSI histo and less on the reversal levels. But I hope this is a lesson in understanding what the higher time frames represent. You never trade. If this H4, for example, well, let's use another line rather than change that one. If the H4 had been up here, then we could have used the H1 to watch this pullback and enter and attack that H4. Okay. If in doubt, stay out. That's all there is to it. I mentioned in a tweet earlier today, just wait for AAA plus trades. You know, wait for this test of an old S support level. Wait for the test of, wait patiently with discipline for a reversal to happen at the pivot level, which this one did up here. Okay, so hopefully the lesson taken from this particular example is never trade into old levels of resistance until they are tested and broken through. But also importantly, you've got all of these reversals. When a level is broken, almost like clockwork, they will drive the price back against itself. And they are just searching out. This was a reversal here actually on the H1. High, low, lower, high, lower, low and close. Pull back. That's an engulfing or outside bar close. Break, should I say, reversal. And what do? They pull back. All they are doing is capturing in the idiot long traders, flushing out stops for the short traders, getting as much liquidity back into the market as they can before they drive it down. That might be totally wrong. If you're a professional bank trader, I apologise, but that's how I understand it. And that's all I need to understand in order to trade this with confidence. Okay, 3 reversals within one day on one time frame, on one currency pair, sorry. There are literally hundreds of currency pairs out there, and indices and stocks that can be traded with this reversal. It's limitless. Thanks for watching. Have a great day. Oh, and time frames, remember, so you could be trading a weekly time frame and using the hourly to enter and so on and so forth, but you'd be trading the weekly time frame and using the M1 to enter, because you're just trading trends within trends. Thanks for watching. Have a great day.